Hey everybody, welcome in. Feeling a little bit dizzy today because of the market volatility. And that's just the nature of the beast. Welcome to crypto. Thank you all for coming. Today we're going to talk about, yesterday I spent a lot of time talking about the tariffs, whether they're good or bad, and we'll touch on a little bit more of that today. We'll talk about market timing and how we plan for 2025 and how we profit from it, how we stake or unstake, also cold storage. We'll talk about lump sum versus DCAS for those who just came into a whole pool of cash, and how to allocate, and safety, and so much more. Thank you all for coming. Just looking at the market right now, it's pretty clear we had a vicious dip all the way down to 96.9, 96.8 on Bitcoin and 194 on Solana, and that looked like the bottom. But the Trump tariff thing is kind of rattling the markets. They expect an ugly open tomorrow. But again, those with dry powder and sniper rifles will be ready. Let's get into the story today. The story is called Timing the Market. And these are the top questions from the week from everybody, which touch on a whole variety of different subjects. So let's get into and all the questions come from Patreon, of course. Thank you to Patreon. Let's get into the very first question from Scott Lakers. Be careful, by the way, if I don't know if that's your real name or not. Maybe Lakers fan, makes sense. But I'm a new follower to the channel and very impressed with your track record and all the work you put into your research. I'm planning on investing 100K in Feb into Tesla, MicroStrategy, and Solana 50-30-20 split. Would you advise a lump sum or DCAS? And if lump sum, what price would you enter at? This is such an important question. And in summary, it really varies on the market conditions we are in, because right now is a great opportunity to snag a little bit of stuff. You know, we are way off prices where they were 2 weeks ago, but we're also at the same level we were a month ago. And that's just the crazy volatility of where we are. So let's talk about a couple of things. First of all, when to lump sum. Now, there is math behind this, and historically, lump sum investing tends to outperform dollar cost averaging about 70% of the time if you're early in the bull market. So imagine you got 100 grand and Bitcoin's at 15,500. You don't DCA it. If you got 100 grand, you just drop it all right there. Boom, lump sum. And then it's much better than DCAing. But if you are mid to later in the bull market, then you don't do that. But other reasons why you would lump sum is if the trend, and I'll kind of share a very crude chart, if you believe the macro environment and the trend for things like Tesla, MicroStrategy, and Solana are bullish, entering sooner might be better. But the risk is, if the market dips, you experience a kick in the teeth. And sometimes humans actually feel worse, losing something than missing out on an opportunity, and some are the other completely way around. So let's get into it. So when do you DCAS? And this is kind of more relevant to you right now because we are kind of later in the bull market, but the DCAS approach spreads out your entries over time, reduces the risk of mistiming the market. So for example, you could have bought Bitcoin at 108K the other day, or today at 97K. That's quite a difference in price. Or we had Solana go to 256, and then it fell all the way to 194. And that is a big swing just in a matter of weeks. So timing the market, again, using DCAS, it optimizes your entries over time. And if you are uncertain about short-term price action, expect volatility. And what you could do, what I would do, is break your 100K into a bunch of different tranches, maybe 4 to 6 tranches allocated to different assets over 6 to 12 weeks, and let the market dictate. What I do is I let the market tell me what to buy, when to buy it. You could be looking at 4 different assets, but one falls into your trap before the others, and then you allocate to that first. Now, another way to look at things too, and this is where it gets a little bit tricky, and I tried to put together a very crude chart to represent the markets and how they work. So imagine we're trying to time 2025. The gold line is Bitcoin and the red line is Tesla. Okay. Now, I could be wrong in this, but we shall see. And there are no numbers attached. But if you imagine, I do believe Bitcoin is still very much in a bull market. Despite what you read on crypto Twitter, everybody thinks Bitcoin's already in a bear market, all because of tariff talk. But when you've been around tariffs and seen cycles happen many times, you'll know very quickly it's a nothing burger after a very short amount of time. Okay? But it's these panic opportunities that give you time to get in. So let's get back to this little chart. Again, it's super crude, but it's what I believe could happen in 2025. Red is Tesla. I think we could chop sideways until the later part of 2025. At least I hope we do. And I think Bitcoin will go on a rampage up until October. So if you imagine this being the full 2025 calendar year, that's what I think could happen. But the most important thing to note is that big green arrow, the delta between the two assets. You have one asset going on a rampage and the other one chopping sideways. And then you rotate. And then you get your crossover point. And that is the magic of really what you need to consider. But it's extremely difficult to time. But let's look at the last couple of years and show you what reality actually looks like looking backwards. This is what reality looks like. I threw down my big holdings here. For those of you who know me and the channel, I'm heavy in MicroStrategy. And I have Solana, heavy in that. I have Bitcoin, heavy in that. And I have Tesla. In fact, these four assets make up over 90% of what I have. Okay, that's it. But if you look at the returns since 2023, MicroStrategy is up, coincidentally, 2,300%. Solana is up 1,875%. Bitcoin's up 485%. And Tesla is up 229%. So when you put a small amount of money into an asset like MicroStrategy and then it blows up, your allocations also blow up, which messes things up a little bit. And we'll talk more about allocations in a minute, but that's what can happen. But you also always have to balance risk and reward. And it's very, very difficult to time these things. In fact, let's go back to this chart for a second. And if you look at the two lines, you've got that reddish color and the purpley color. They sometimes follow each other, but sometimes they don't. So Solana kind of follows Bitcoin, but Bitcoin definitely follows MicroStrategy or vice versa. But sometimes they don't follow each other. And that's what you need to take into account as well. Again, when it comes to timing the actual market and your entries. So wait for things, lay your traps, have a process, because we're not early in the bull. I wouldn't imagine going lump sum is a good idea. We have to see how this tariff stuff shakes out, and that could bring about some very good buying opportunities. Many of them could hit first thing Monday morning. We'll be ready. And that's it. But there's other questions that are kind of tied into this, so stay tuned for those too. But remember, sometimes it just takes one winning trade to be completely life-changing. Or you can get a few of them too, which is also nice. Now, let's talk a bit about where we are right now. This is the second question from Magical7. Happy Sunday, James. You are the epitome of integrity and contribution. Oh, thank you so much. So you're embarrassing me now. I'm new to your community and need to fast track for my retirement. I'm the prime example of working a lifetime to build my family's fortune, only to have it destroyed in a minute through the lack of due diligence with a business partner. Luckily, I had 100K left to invest in 2020. My portfolio is 50, 20, 15, 15, Bitcoin, ETH, MicroStrategy, and Solana in this order. I just cashed out my ETH, and I would like to know, should I buy more Bitcoin, MicroStrategy, SOL, or Tesla in one shot, or DCA, or DCAS, as we like to say here? Is this the right time to buy, or should I wait it out? Thankfully, I have a TFSA account, which I would like to take advantage of. Unfortunately, time is not on my side, but at least I can start rebuilding for my children to benefit. Blessings to you and your family. First of all, I'm very sorry to hear about the setback you experienced due to your business partner. This is not the first time I've heard these types of stories, but it's also great you're looking to rebuild and secure your family's future. So remember, analyze very carefully who you get in bed with. And that includes literally getting in bed with and getting into business with. Sorry to sound crass. I know great people who have been in business with people for 10 years and they get stabbed in the back after all that time. And just, it's like you really have to spend a lot of time understanding, just like researching a company or an asset, understand who you are in partnership with. So let's move that out of the way. Second of all, we are at a very interesting time right now where you have sold, what was it, 20%? You just sold your ETH, correct? Which is 20%. So I assume you have 20% cash right now. And because you got in with 100K in 2020 and you're in the right assets, you did very, very well, as we saw here in this chart too. But first of all, we are in a little bit of a crisis mode, which actually is what I live for. I like running into burning buildings. And this is kind of timely, and it ties into my long conversation yesterday about tariffs. But tariff crisis right now we're living through means a lot of uncertainty and very high volatility, which means good buying opportunities. But what I want to point out here is what happens 10 days after a crisis and 60 days after a crisis. So Bitcoin, you can see US Iran escalation 2020. 12 days, 20 days, Bitcoin does really well. 12% up, 20% up. Election challenges in 2020, 10 days after, 19% Bitcoin is up, and 131% within 60 days. Ukraine invasion, I remember that trade like it was yesterday. The minute that happened, I knew, which is terrible. I'm very anti-war and everything else, but at the same time, anyway, I won't talk about that. I don't want to trigger people. And regional banking crisis. I remember Bitcoin went up 25% in 10 days and 32% in the next 60 days. And the yen carry trade, again, that wasn't quite as good because there was just bad market timing. And August sucks. Okay, it's a bad month. Everybody's away on vacation. Nothing really happens. That's why we didn't get a big return there. But now we're going through a crisis. And I can tell you, okay, Bitcoin down at 97K is probably an extremely good buy. And it'll probably be a lot higher 10 days from now and 60 days from now. It's on the internet, so you can come back and watch this video in a few months. So you have this buying opportunity on your lap. The question is what to buy. The other thing as well, Bitcoin, you go see here, is very far from overheated. This is a pure multiple of 1.5. We got a long way to go. The overheated zone begins at 3.5, which means the Bitcoin cycle is still early. No banana zone yet. No euphoria yet. That will come. And remember this, my crude chart. This is what I believe will happen in 2025. We're going to get this. I just don't know when. Is it going to happen in the next 60 days, the next 90 days, 120 days? Somewhere around that time frame, things will kick off. And that's when you need to be careful. So all of these first three questions, and we're only on the second one, will tie into each other. And hopefully the story will begin to make sense in a few minutes. So when I look at your holdings, not financial advice, but if I was you, and imagine, and the corollary is also true for this, okay? If you imagine you are 65% Bitcoin, which I include MicroStrategy, you're 15% SOL, 20% cash, and you have no Tesla. No Tesla. I would work as hard as I possibly can to build up at least a 25% Tesla position. That's exactly pretty much where I am right now myself. Now, if it was the other way around, if I was 100% Tesla or 65% Tesla and no Bitcoin, I do the same thing. Allocations matter. You don't want to be all in on one thing. You want to have high conviction, very few assets, but also good allocations. Okay, that's my method. It's what's worked for me in life. But also, remember, things can get screwed up by complete crazy outperformance in terms of actual size of positions. SOL Strategies is another example of that, of how a September trade just went crazy. Anyway, this is where we are right now. But remember, also, we're late in the bull market. And people hate when I say that. It's not over, but it's also not beginning as well. So I would try build up your Tesla bag as quickly as possible with that 20%. And the question is, why Tesla? I mean, and I know half the population on the planet absolutely hate Elon Musk. I get it. I spend my life trying to understand human behavior and how the mind works, because that is so important in investing. Once you figure out how the reptile brain works, you'll be a much better investor. But why? This is shout out to Tesla Economics. A simple little chart. Tesla is a $1,000 stock trading at $400 with electric vehicles and energy storage. In fact, I have calculated that the energy storage business alone will be worth $1 trillion in the year 2026. By the way, rumor has it, they're opening up a new mega factory, like a gigafactory for megapacks in Berlin. Not sure, but that could be happening. They are opening a third. We just don't know the location of it as well. So that business is easily worth $1 trillion. So first thing, $1,000 stock, you can buy for $400. Now, Tesla is a $2,000 stock trading at $400 with the Cybercab and unsupervised FSD, which are coming in June. All right, we're in Feb already. June isn't very far away, ladies and gentlemen. That's a 5x. And I've said vocally, by 2030, Tesla, worst case scenario, is a $2,000 stock. Worst case scenario. There's not many places you can get a 5x. Yeah, we've had 15x's and 20x's like crazy. But 5x, risk reward, where the risk is very low and the reward is pretty much guaranteed, again, is a no-brainer. And final part, Tesla is a $5,000 stock, trading at $400 with Optimus, which is coming in the fall. 5,000 of them will be running around in the fall, which again is crazy. And Tesla Economics says, your skepticism is my alpha. Very few believe. I've believed this for years, but now it's really happening. It's right there. You can just nearly reach out and touch it. So that's why Tesla. So anyway, people call me a Tesla fanboy. No, it's just been very kind for me since 2017. So I like alpha. I don't care in what form it comes or who is behind it, as long as they're not a sociopath. That's where I draw the line. Or as long as their products don't hurt people. That's me. Next question from 1K, which kind of ties into the previous questions too. How did you know ETH was dead? And how do you know to sell so early and move to Solana? And it's been 2 years since your last post, so thank you for posting. So I wouldn't say ETH is dead, but it's pretty clear it was very richly valued a long time ago. And that's kind of what I look at. And there's three things that help me come to my thesis. One is the data models we build. We have a thing called the SCP Profiler. And for me, this identifies L1 and L2 winners very, very early. It looks at about 60 different ratios. And in late 2022, I was looking for the ETH killer in early, as you know, if you watch this channel, early 2021, we'll say January, I had an ETH position and I was very worried about it being eaten by a competitor, because that's what I always look at. It's like, who could possibly kill my ETH? So I looked for the ETH killer. That's why this was built, SCP Profiler, to find the ETH killer. And that's exactly what it did. And back in late 2022, SOL dominance was like 0.3% of all crypto, but it was doing pretty much as Ethereum was, and more than other chains. And it was by far the best chain from all of the ratio and analysis perspective. First thing, that's how that was found. Second, I'm a very big believer in Occam's razor. The simplest solution is the best one. That's simple. And to me, ETH and the ETH Layer 2s never made any sense. And again, as Elon would say, he looks at things on a first principles basis. I kind of try and do that too. But when I look at this, ETH cost complexities, layer 2s, fees, transferring, side chains, and roll-ups, and ZK roll-ups, and I can't. It's too confusing. And it's also really hard to use. And it's really expensive. So, better, cheaper, faster. That was Solana's second thing. Third is the SOL upside model. So I knew that Ethereum was doing, or Solana was doing the same amount of business as Ethereum pretty much, but it was trading at like literally a 20th of the market cap. I said, this is doesn't make any sense. So I built another model called the SOL upside model with a team. And at the time when this thing we built, the market cap of Cardano was higher than Solana. And I said openly on Twitter, I said, that makes no sense whatsoever. It's absolutely ludicrous. And then I was mocked by the head of a chain. And then I knew I was onto something. So SOL upside model said we're easily going to a third of ETH's market cap, then 50%, then 70%, and then one day it'll flip. So I knew there was a lot of upside, which is reflected here in these percentages. SOL up 1,875% since late 2022. And that's it. It's not hard, just data. And that's how I knew to get rid of it. Anyway, ETH is not dead. It's just doesn't have a North Star, struggling, and the ETH killers are coming fit, fast, and furious. Not just SOL, but also SUI, we'll talk about in a minute too. Oh, we're talking about it right now, in fact. Another first time Vincent posted. Vincent 1, welcome to the family. I've been watching you for many years now. Thank you. It's greatly appreciated. My question is, I have zero allocation to SOL or SUI. What asset would you choose for a long-term investment moving forward? Am I too late for SOL? I already have my Bitcoin bag that I allocate to. Good stuff, Vincent. And yeah, you don't need to catch them all or hold everything. But again, let's look at some data here. Let's look at Solana. By my math, okay, and probably many other people, if you look at the money that this chain makes, okay, and the profit, it's trading at a PE of 30. Okay, imagine a company like, I don't know, Target or Tesla or whatever trading at a PE of 30. It's for a thing that's growing so fast, like literally it's 20xing every year, and it's trading at a PE, price to earnings ratio of 30, is nonsensically cheap. Okay, this is by far the cheapest crypto out there. Again, if you use traditional metrics to value and appraise it, which I do, because that's where I come from. Anyway, in terms of SOL versus SUI, this is interesting. Every way you measure it, again, transactions 56.5 million versus 3.9 million. Users 4.4 million versus 584K. The amount of activity on the chain, the daily transactions over daily users is double. So people are a lot stickier on the SOL chain. Fees, 5 million versus 35,000, a lot higher on Solana. Developers, again, a lot higher, nearly over 4x the number of developers. So no matter which way you skin it, yes, Solana does a lot more, but you got to look at key ratios that tell you, is it cheaper or more expensive? And in full disclosure, I do have a SUI bag, but it's much smaller than my SOL bag. Now, the FDMC, fully diluted market cap over daily active users, or the same thing over daily transactions, says the same thing, and that is the value per user of SUI is about 64K, and Solana is about 29K per user. And that changes every single day, just like this model, because it pulls in a whole bunch of data from a whole bunch of different sources to calculate it for us. So from that perspective, you could argue, using layman's terms, Solana is half as cheap as SUI. So that's why, if it was the other way around, I would flip, I would move, but it's not. And let's look at the SOL upside versus SUI versus Bitcoin right now with the current levels. This, again, auto pulls. The price when this was done was $197 for Solana. And all of the targets there are AI targets. They could be completely wrong. They could be on the money. But taking a composite score of them all could be quite good. But they believe Solana could go to $519 this bull run, and Bitcoin could go to 194K. I think they're both a little rich, but SOL could do a 2.64x, whereas Bitcoin a 1.92x. But the risk is higher for Solana over Bitcoin. The question is, where do you want to play? That's up to you. 2.47x, 2.64x. Again, it's a moving target. In fact, let's look at Solana right now. It's now 205 already. It rebounded fast. Anyhow, it's up to you. I think you need to have a basically core Bitcoin position and a leading L1 position. That's the way I allocate personally. And the rest in proxies and AI. That's my whole positioning as well. Remember, narratives matter too. Hope that helps. Welcome to the family. Now, more Cowbell has an interesting question. Appreciate all you do for the community. In a recent video, you said, if you get to a comfortable level, bank some, lock it away, put it in safe stuff. Could you please provide a couple of hypothetical safe portfolio examples? Thoughts on mutual funds like QQQ and VOO, NFA, of course. Well, first of all, I don't do indexes or ETFs because I don't like owning garbage. And I know that 60% of the S&P 500, etc., are going to zero over the next 5 to 10 years. That's just the reality. Now, what I mean by when you make life-changing money, if you get to a position where you have all the money you need for a good retirement or whatever you need for life, or pay for your kids' education or buy the castle or whatever, take some off the table. The reason I say that is because this can happen, okay? This is why I say bank some and put in safe stuff. So this is a chart of an asset, which many of you know. Those who want to look in the top left corner, you'll find out the name. But it's a very big asset that I own, and it's what can happen. It's what happened in between 2020, late 2020, early 2021, all the way to late 2022. You can take a small amount of money, make an absolute fortune, and if you just hold, you'll see it all go away again. Granted, it's rebounded, but you had to wait 3 years for that to happen. This is why I say if you make life-changing money, take it out, put in something safe. Now, my definition of safe is also maybe people would find a little bit perverse, but balancing risk and reward is always my thing. In my whole life, I look for what I call a money market account. And what I mean by that is you take profits from riskier assets or riskier trades or options trades, and you stick them in a place of safety. For me, between 2017 and 2021, that was Bitcoin. I knew crudely, like a caveman, I knew there was only 21 million Bitcoin, 5 million were lost. And I knew there was 50 million millionaires. So that told me alone, this thing is scarce. Getting to 1 Bitcoin is going to be huge and very important. And that's what I tried to do all those years in 2017. Now, fast forward to 2022, late 2022. Again, I talked about things falling into traps. Tesla fell into my trap, falling down to $106, $103, late 2022, early 2023. And that became my money market account because I knew, guaranteed, because I've been looking at it for many years, analyzing it every day, minimum, this is going to at least $2,000 by 2030, also possible $8,000. And many experts now say $10,000, $11,000, $12,000 by 2030. Many. I was the first. When I first came out with my video, 8 ways to 8,000, people thought I was crazy. Now I don't look so crazy anymore. Anyhow, sandbag target, $2,000 from where we are today. That is my money market to stack, to build that position, because I see that as the best risk reward. And Bitcoin is also a very good risk reward. But I am in a far larger Bitcoin MicroStrategy position than I am Tesla, despite stacking like a madman since 2022 and also since 2017 as well. So I hope that helps. And again, my goals are not your goals, but stack accordingly based on where we are. Now, this is a new question from Maya. This is the first time Maya has posted. Welcome to the family. How can I leverage IA resources if I only have 2 to 4 hours a week to dedicate to trading, excluding options trading and crypto exchanges? Is it necessary to engage in options trading and crypto pair trading to benefit from IA? Please advise if IA is not suitable for someone with my constraints. I can learn options trading, but time remains a significant issue. Background, Anyway, you've made a 50% gain on MicroStrategy and FBTC, which I wouldn't have invested in without your influence. So great job on those two. So it sounds like you're heavy in Bitcoin. And congratulations again on your 50% gainers in those two things. That is so good to hear. And I truly appreciate your continued support. But absolutely, everybody is in here for being on the right track and understanding where we're going. And we have a lot of people that have full-time jobs. They have to work in a place 40, 60 hours a week where they can't look at the markets, or they're with people. We have physicians and engineers and pilots and you name it. People can't look at the markets. And that's why I've got 2 things that we've built specifically for them. In fact, we work very closely with somebody who is a physician, and they are with patients all day. And this is the inspiration for ATR, the augmented trading range model, which is used on the 12 or 24-hour time frame. You just need to check in it once a day. That's it, for 2 minutes, and look at your assets on a little saved portfolio list. Now, putting this in context, if you look at ATR and, say, Tesla over the last, say, 3 or 4 years, you would have had the opportunity for 87 trades, and that is one trade every 10 to 12 days. It tells you when to get in, when to get out. If you have a retirement account, this works very effectively. Again, you see your little buy signal, and your sell signal. Again, one trade every 10 to 12 days. And you can do a little bit of research at the weekend or on your phone, anything like that all the time. So that's designed for you. The other thing that was also very helpful is DCAS, which I also use. And this helps you build a bag. Again, you can check in once a week for 5 minutes. And this is your dollar cost on steroid model. And it's an excellent way to strategically invest over time the market, and time when you buy and how much you buy. And this means you don't have to monitor markets daily. You can just jump in once a week and say, oh, it's telling me to buy 2.47 times my weekly allocation of $100. It's $247. Tells you when to buy it. Or if the market's hot, it'll tell you, don't buy anything. Save the $100. Wait for a better buying opportunity. And that's what this does. So yes, you can absolutely benefit from being here with those types of tools as well. Matthew M., do you time staking unlocks to not get caught with your pants down? If you want to unstake some Jupiter, but the rewards are too big to pass up, when are you unstaking? Thank you. So this is, the terminology here is a little bit weird because unlocks are a little bit too different to staking. But with Jupiter, your time frame to unstake is 30 days. Now, I still believe we are in a bull market. I still believe we have a long way to go. We've yet to hit alt season. We've yet to hit the banana zone. I spoke a lot about that yesterday. But once you kick off your unstaking process, it'll take 30 days. And once you do that, though, you don't get the ASR rewards. And Jupiter is now my largest SOL alt today because Solana has fallen down quite a bit. But this is making up for it. The other crazy thing about this one, Jupiter, is nearly half of my bag was free rewards. I didn't even buy it just from using the platform. I earned a lot, which is kind of crazy to imagine, like thousands of these things. So not only did I only had to pay for half, I bought most of it at about 50 cents. And here we are. So I still think it's a very interesting one. I do plan on holding it staked. I enjoy the ASR rewards. In fact, this is from Marino, who believes Jupiter ASR rewards are dropping this coming week. And in his opinion, it's highly likely. And by the way, Marino is in the know. He is probably the #1 authority on Jupiter right now on Twitter. So I will be holding, and I will be staking, continue to stake, and continue to get the rewards. So that's my plan. I don't know if it's yours too. But I will, the minute I unstake, I will let the community know as well. Because I share every move I make as we go forward. Next question, quick one. This is, I love when people look out for the community. From Slubbles, good day, James. Heads up, another thief. InvestAnswer clips. No, this one is actually a legitimate channel managed by a separate group. Thank you to them for doing that. And yeah, it is legitimate. It's InvestAnswers Clips is the actual name. And it's about 19,000 subscribers. And what we do is we take segments out of this weekly video and chop them up, little 2-minute, 3-minute segments. So people who don't have the time in today's world to watch a 40-minute video, they can just get to the piece they want. And everything's tagged up and time-stamped and can be easily found as well. So that is a legitimate channel. Next question. This is the first time Forbici has posted. Welcome to the family. There are so many wallets out there. Is there a best cold storage wallet? Well, this is a tricky question because, yeah, it all depends on many factors. And nothing regarding cold storage is straightforward. And we have a number of different things that we look at when we analyze different wallets. And it all depends on who you are and what you're looking for. So different wallets might support different cryptocurrencies. Some only support Bitcoin. Some support all altcoins and poop coins, etc. But you have to look at things like security requirements and physical security, encryption levels you want, the strength and type of encryption that you want to use to protect your private keys, your seed phrase generation methods, how secure is it, and what is your recovery seed phrase process, very important. Also, your level of sophistication. What is the UI? Is it for professionals or beginners or really tricky? Some are you need to be a developer to use them. Others are very user-friendly. And then you've got advanced features like multi-sig support, if you need that too for a loved one or a lawyer or something, integration with hardware security modules, and so much more. The cost is also a big issue. Some are cheap, some are expensive, and backup and recovery and privacy, etc. There's a whole bunch of factors depending on exactly what you're storing, because you're not saying what you're looking to put into cold storage. It's different. Now, we have an entire wallet and security playlist. Just browse through this. This will help you choose some of the big names on where you may want to go, what you might want to use, what your level is, and it'll score it appropriately, and also benchmark different wallets against each other. So check that out as well. And we don't pump wallets or anything else, so this is all completely objective information from one of the people on the team who's actually a wallet expert as well. Hope that helps. Next question is from T13. Oh, we have a 1K and a T13. I love these names. Thanks for all your hard work and insights. I learned so much from you over the past 2 years. My question is, if we get a banana zone this year and you take some profits, what would your ideal allocations for SOL, BTC and Tesla and MicroStrategy and cash positions going into the bear? I'm torn between selling 20 to 40% of crypto, ideally rotating into Tesla and cash, then buying MicroStrategy, SOL and Neptune on 50% dips in the bear market. Well, I like the way you think, and it's good to be prepared for when that time comes. And I think sometimes as well, in full disclosure, when everybody thinks a banana zone is going to come, maybe it doesn't come. So we have to prepare for that too. So my plan, again, not yours, but yours is kind of somewhat similar. I do plan on ditching what's left of my miners. I just need a spike. I need Bitcoin to spike for that to happen. I will either take some profit or hedge MicroStrategy. I'm not sure. It depends on what they do. I have shared my thesis before that considering how much Saylor is planning to buy, that could completely deplete the supply available. And that, in turn, would make MicroStrategy the only on-ramp to Bitcoin, which would drive the NAV premium to the moon. I'm waiting for that moment. There's a small chance it'll happen, but again, Bitcoin is very scarce, and others are coming. SBRs, pensions, sovereigns, enterprises, treasuries. It could really kick off. That's why I'm on the fence now whether to sell or hedge. And part of the problem is my cost base is extremely low. So that has a big impact. Also, same thing with Bitcoin. Profit or hedge it, not sure. I will take some profit in Solana, book those gains, and also I will pivot to Tesla. And in fact, I buy Tesla on every opportunity and have done since late 2022. And maybe any other upcoming AI plays, or maybe, who knows, a little SpaceX or whatever else, as you mentioned in Neptune. We'll see where all this goes. Now, we do have a method to do it more scientifically. This is an example of the Bitcoin profit-taking plan based on my cost basis of Bitcoin, based on where I believe Bitcoin would go, how much I would potentially sell, or how much I would hedge. Again, it works the same way. If you're looking to, say, take 20% off the table, what you can do instead of selling it, you can hedge 20% in those layers. Very important to know that too. And also, you never, ever, ever, ever want to sell all your Bitcoin. Bitcoin is your life raft. And you also always have to look at your tax situation to find out, okay, if I'm paying short-term capital gains and they add up to 50%, you need a big downdraft in a bear market to be able to recoup the selling of that. So that's another big issue for you to consider. If your cost base is nothing and you got huge taxes, blah, 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 it can be painful. So bear that all in mind when it comes to actual selling, but you never want to sell at all. And in fact, somewhere between maybe selling 20% up to 50% is what I would maybe think about doing. But it also depends on the price of what I'm rotating into. I do hold cash, but I don't like holding it for long, and I don't like holding a lot of it as well. I want to put it in something where it's working actively as well. So again, hope that helps. Next question is from Hobbit44. Greetings to you. Could you comment on liquid staking of our SOL? Particularly, I've been liquid staking with jitoSOL earning 7% APY in an auto-compounded SOL, but with JUP revenues. I looked into it and switched it all over to jupSOL, earning 12% APY. Just wondering if you think liquid staking is too risky, or if it's good to earn the yield in SOL, keeping in mind picking up pennies in front of a steamroller admonishment. I like the way you think, and that's very important. First of all, liquid staking is red hot right now. You earn yield in SOL, and it's really very good if you're long-term bullish. The auto-compounding maximizes returns with manual reinvestment, and it's very capital efficient too. Again, no matter how you do it, you can use these things and still use them in DeFi while still earning rewards, which is awesome. Now, there is, of course, risk to this as well, and that's why I don't do it. And if I was to do it, I'd only do it with like 10% of my bag. But I like to keep things very simple, and I'm very happy with my nearly 8% APY on staking. But here, there is, of course, always smart contract and custodial risk. Liquid staking protocols do have an additional layer of risk, as always. No such thing as a free lunch. There's also redemption liquidity. If there's a rush to unstake, there could be heavy slippage. And there's also protocol-specific risks. You know, Jupiter jupSOL is new, and 12% is very pretty, but watch how long it can be around for. So the Lindy effect is very important with this stuff too. And I love that you did mention picking up pennies in front of a steamroller. It takes a lifetime to make it, a second to lose it. I'm happy with 8%. I don't need to take on more risk for 12%. It's just not worth it to me. But that's just me. My goals aren't your goals. Next question. Lots of questions today. Matthew, can you explain your conviction to ride faster horses over Bitcoin lately? You're looking for snipes for Tesla, but if an SBR is likely, wouldn't Bitcoin actually do better to dump money into these days? Great question. Brilliant question. And yeah, I'm very bullish on Bitcoin. But as you know as well, I share my allocations twice per week on Patreon, and I feel very overweight Bitcoin and MicroStrategy. And I feel very underweight Tesla, despite stacking like mad since 2022, because it's not catching the gains of MicroStrategy. So again, my portfolio is skewed. I need to balance risk and reward. And I've not sold any Bitcoin. But there could come a time where that happens. But I'm waiting for exactly that. I want to see how 2025 plays out. I want to watch the Tabby model. I want to see how high we get. I want to see the supply crunch. I monitor the OTC desks every single week. I literally look at every piece of on-chain data I could possibly get my hands on to understand what's going to happen next. This noise we're seeing right now with the tariff war, that's just noise. That doesn't affect Bitcoin big time. In fact, there is a theory I posted on Patreon today as well that this tariff stuff could actually be a very big positive for Bitcoin too. So again, we just have to wait and see. But allocations matter, and I'm very focused on them, but I'm not in a rush to get to my target allocations either. I'll be patient, and I'll wait for the right times, and I'm going to bring this little chart back up again. It's crude, but it's also very accurate. I don't know if this is going to happen, but I believe there's a good 60 to 80% chance it could. And I'm hoping this red stuff stays cheap. And I'm hoping the SBR drives our Bitcoin to the moon. But there's no guarantee. Again, my bull target for Bitcoin is always 120K. If we get to 150K, I'll be overjoyed. That's it. That's 10x off the bottom. That's beyond my wildest dreams. A lot of people are saying $250K, $1 million. Yeah, well, that's why you never sell at all. You always keep some. So you can always be riding the train. But it's very important as well to approach profit taking very scientifically. And this is what we spent most of this bull market building, the profit taking model as well. So thank you for that question. Two last quick wrap-up items. One, we are helping the animal sanctuary in Dumaguete, hope I got that right, in the Philippines, supporting building a new shelter, which is awesome, the work they do. And shout out to the kids. High five to all kids and teens watching. This is a special shout out to Santoshi's 12-year-old son. And I love when kids invest early. Just think about the compounding effect of even just one share of Tesla over their lifetime from the age of 12 to say 50. 40 years of compounding will be absolutely life-changing. And that is your path to financial freedom. So get your kids in early, big time. And finally, DCA tomorrow morning, 7:30 a.m. Pacific. And if I'm not mistaken, CTO is moderating, I think. Could be wrong there. We'll find out later tonight. And thank you all for coming. I'm going to do some live questions right now. And that was timing the market, allocations, profit taking, all the stuff that is so, so important today. All right. Question from Rusted Woods. IDSS folks, I have cash because of IDSS to deploy. Woohoo. It's we are going to go to a little bumpy time. We won't know typically. So what happens with Bitcoin and crypto? It's the only 24/7 market right now. It's the only thing that's open. And that's why people are selling, because they're panicked. Tomorrow morning, I expect a root opening at 6:30 a.m. Pacific. Maybe some after hours action tonight, which I'll track as well. But there will be buying opportunities. There's a lot of nerves out there, and a lot of TradFi can't operate until tomorrow because they're not in crypto. So you always see Bitcoin selling off first, but also recovers first. So I'm waiting for my opportunities, and we'll see. Well done, Rusted Woods. From Nick M. Would this be a good time to flip Bitcoin to MicroStrategy before Wednesday? I think MicroStrategy is in the quiet period right now. I also think they might be doing the FASB accounting, which means they could be booking a massive earnings per share print for their quarter. I'm not sure on that. I'm speculating here. The NAV premium is about 1.7 from what I recall, and the volatility will be mad. I don't know. I think if we see MicroStrategy low 300s, it's worth a nibble for sure. If you can do it tax-free, go right ahead. Rancid Crypto. I finally got my son Dylan to start watching. Yay! Thanks for all the alpha. Kids are great. Dylan, get yourself instead of buying an Xbox or something, get one share of Tesla and set up a little retirement account for your kids too. Justice for all. Staking SOL and Helios via Solflare. Want to claim my rewards on Jito Network. Is it safe? Have you done so? Do they expire? I don't mess with that. I don't have the time. I don't like complication. I don't want to risk screwing up. So I stake and hold. That's it. I'm very risk averse when it comes to that stuff. So I haven't done it justice for all. But there are tons of people in the community that probably have as well. Check out Discourse. And I'll make sure there's a place for that as well. Sol Strider. Walked into a Tesla dealership last week and bought a brand new Model 3 off the showroom floor. Woohoo! Lifestyle chips cashed in, grew up in a trailer park, and now look at me. Can't thank you enough. Soul Strider, you are incredible. So proud of you and these stories. Wow. And really, really well done. Next is from SigDiv. Thank you to all the team. Bought the dip today. Curious about your thoughts and why tariffs are considered such a big deal, considering USA ran them for 137 years prior to 1913. So tariffs are, the big tariffs that everybody's concerned about is Mexico and Canada with the 25%. That's what's freaking everybody out. If Canada or Mexico retaliates, they will get punished. They're already over a barrel. They are very exposed. If there's no trade other than energy with Canada, for example, it's kind of a nothing burger. So the person putting these tariffs in place is holding all the cards. Now, China is another situation. The 10% tariff on China, the Chinese will retaliate, and that could get ugly. But again, it's 10%. It's not the end of the world. The market will digest this news and move on. Use this volatility to your advantage, is what I say. I think it's overblown. And yes, we've been through the same thing 2018, I think it was. Tariffs on China, that the S&P 500 corrected a tiny bit and bounced right back. And it's just a little tiny red blip. So that's just history. Again, markets tend to overreact to the downside and also to the upside. So play the volatility. That's how it works. Thank you, Nagesh, as well. And a big thank you for your super stickers to Bit Broccoli, Dirk Diggler, Dog1, Thalon Jet, Julian Reichfeld, AC1, Moto 89, Brock, LC3 Blink, DBF 430, Adam Q, and Nagesh C. Appreciate you all. And, you know, markets are volatile, especially the stuff we are in. And that's just the nature of the beast. So be like the guy in that meme where he's on the roller coaster with hands in the air like he just don't care. That's the way to go. Thank you all for coming. Radrick as well. Have a good night, everybody. And thank you to the mods in the chat. Sean Donnelly, American Beijinger, K8, TD Tesla. See you all tomorrow morning on DCA. And expect a very volatile and bumpy night. But if you have any dry powder, probably a good time to nibble.